if they're cutting and it's not hitting the fan, basically, that's ultimately very beneficial for risk on assets. If they're cutting because of like recession, or like recessionary fears, that historically has been a bit more mixed of like a result or an outcome of like risk assets.
Sol versus ETH, just showing that Solana's just continuing to grind higher versus ETH. You see sentiment shifting around tariffs. It takes one hack on an infrastructure token to then send everyone to the other side.
What is like the biggest mistake that people are making right now? Do you see any sort of trend in the behavior they're making? Hello guys, welcome back to another episode of Tapping Into Crypto. Today we're joined by a special guest, and it's not the man to my left, Pav Hundal.
Not me at all.
But welcome, Pav.
Thank you. Hey.
We're joined by Matt Williamson, who is the Head of Research and Content at Collective Shift. Matt, welcome to the show.
Thanks for coming.
Thank you, Ted. Thanks, Pav. Great to be here in the studio.
First time in the hot seat, hey?
I'm feeling it.
Yeah,
this is really heating up.
We've had Ben Simpson, obviously the founder and CEO of Collective Shift, on the podcast before, but we've got the real insights today.
Yeah.
You know, Ben's just the face, but Matt's the man behind, or the brains behind the operation. So I hope Ben doesn't listen to this, but hopefully we get some juicy insights. But look, we've got plenty to cover today. Obviously, we want to give a recap on last week. Fair bits happened with the tariff world. We won't touch too much on that because I know people are probably a bit sick of hearing about it.
It just keeps changing too.
Yeah. Then we'll look at sort of the outlook for the rest of 2025 and with a crypto lens, and then touch on some altcoins as well, and Matt's sort of expert outlook for the rest of the year. But without further ado, let's dive straight in. So, market recap. I mean, what's happened? Like, since last week, when we recorded, we had Trump pausing tariffs for 90 days, and we saw the market recover a bit.
Absolutely, send it.
Yeah, send it. Today, not so much, but you know, Trump and Xi Jinping from China are going band for band. I had to educate Pav on that terminology. He didn't fully understand it, but that's okay. Pav's a boomer. But yeah, Matt, what do you make of all this? Like, has this changed your mindset when it comes to crypto, or are you just sort of watching everything play out?
I certainly feel like I've aged a few years in the past week. Like, sure, there's been over the years a lot of like volatile markets, you know, and events happening in the like global landscape. But I feel like last week was up there in terms of like most chaos. And in particular because of what you said about Trump, just you don't know what's going to happen with tariffs and anything else that he announces. So yeah, I certainly felt like I lost a lot of sleep, and in some cases it felt like it was for nothing because a lot of things got corrected. But yeah, a lot of people are questioning just like, all right, where does this leave us?
Yeah, Pav, what's your take?
The way the markets responded last week told us one thing. It's like everyone and their dog is willing to go risk on when things just look more confident. It's like, that's it. It's completely sentiment. Look at a lot of the things under the hood, except for bond markets right now. Like, that's definitely broken. You could probably say thanks to Trump. And you do wonder if potentially some of the unwinding of a lot of the longer term bonds in the US, like that's a pretty big issue with their plumbing now, that we're still waiting to understand what that means. Even like the expert analysts are like, we don't know what this means. It's like the first time in history this kind of thing has happened. If it sort of relates to some sort of whipsaw event, but it could be like 6 months, 1 year, 1.5 years down the track. I think that's kind of like the unknown right now. But yeah, in the short term, it looks like everyone's looking for a reason to jump in. And then we saw again, like you sort of said, as soon as they said tariffs paused, going to go do a couple of meetings behind closed doors for a couple of months, and then continue to work with China. And then we just saw the China thing escalate. Yeah, Trump go back on a few things that he said at the end of last week before we even got to work on Monday. And all of a sudden, like, sentiment's kind of dropped again. So it's just constantly a minefield.
Yeah. I think the interesting thing from a crypto lens is Bitcoin actually suffered less than like the NASDAQ as a whole. I think it even might have, like, it was similar to the Dow Jones, which is obviously a huge US-wide stock index. So like that's at least the first time I've seen in history where Bitcoin's sort of on par with some of those stock indexes. Obviously, like altcoins, they're more risk on, so they bled a little bit more in terms of losses. But
some more than others lately.
But yeah, it looks like people are seeing like Bitcoin as that sort of flee to safety in some cases when there's a lot of macro tension and, you know, even geopolitical issues, inflation, like the one that, you know, everyone has sort of talked about in the past as being that hedge against inflation. Is this sort of it, like the coming of age that we've talked about for a long time?
Yeah, certainly with gold as well, like continuing to push to new all-time highs. I think in a way, it's almost, people are then looking for alternatives. Historically it would be things like silver maybe, but even then it's sort of a tough sort of comparison to draw. But like that hasn't been doing well, and rightly so, given all its different use cases, and not really looked at as a store of value predominantly. That's like not tied to like the traditional financial system. So Bitcoin, I suppose, is benefiting in a way. That's my sort of take on it, of just like an alternative to something like gold. And over time, the longer that it exists, I guess the stronger that case will get.
Yeah, absolutely. Now, we talked on altcoins, suffering more so than the rest of the market. One altcoin that we woke up today and saw that had absolutely crashed more than anything else is Mantra OM. So the real world asset token that we've spoken about a little bit on the show, like in the last 12 months, woke up to it 90% down from, I guess, yesterday's price, which was wild, right? Considering it was like, top 30 project, and to lose like $5-6 billion in the space of 24 hours, just ridiculous. Now, we spoke before the show. We don't have a heap of insight into why this happens. I don't think anyone does. People are calling out, the project's team for rugging. But, the project have come out on Twitter and said, they have nothing to do with this. I think they said something was due to like central exchange liquidity or something. Do you have more insight on that?
Yeah, I just saw them like pin the blame on things like, heavy like liquidations happening on like central exchanges, and then also just market inefficiencies and whatnot. So yeah, certainly a fluid situation, and we'll see what comes of it. But yeah, it's certainly like for such a top 30, top 20 project on the likes of like CoinGecko or CoinMarketCap, it's really been some time since we've seen like an instant plummeting value.
Yeah, people are going crazy on Twitter as well. Like I saw some guy, like he had what was like 3 million in OM.
Oh, no.
And he's talking about, getting his legal team involved and all this, and talking about, because they had ties to like a UAE investment company, and they were looking legitimate on paper, right? And now this happens, and it's like, I mean, what? Like, I don't want to say what can you trust, but like, that's why I think it just reinforces the notion of like being diversified. Don't be over sort of exposed to one particular altcoin, unless it's like Bitcoin or Ethereum, which obviously aren't really altcoins, but I think it just reinforces that.
Well, speaking of Ethereum, I think there was a post going around too that its 1 year performance is still outperforming Ethereum.
Is that legit?
I don't know, but it's really funny post.
It can't be.
It's a nice dig.
The fact we're questioning that says a lot.
You know what? It actually probably is. Now I think of it.
Yeah. Because it would be, because Ethereum is back out 2023 prices.
Yeah, because its market cap is still over $1 billion, which it probably wasn't 12 months ago.
Mantra.
Yeah.
Sorry, Maxis.
Yeah, no. Oh god. Anyway, we'll give an update on that next week, because as I said, we don't have a heap of information right now, so stay tuned for that. Now, Matt, I want to look at sort of the rest of 2025. Now, our collective shift, you guys obviously do a lot of research and content for your users. What's sort of the notion right now around the rest of the year? Is it more of like a buy and hold strategy that you're employing at collective shift? Like, what does that look like?
Yeah, majority like are buy and hold, like a lot of our members and a lot of the team as well. Like even myself personally are just continuing to hold through this turbulence, and I expect it to be quite choppy for the short term, the next 1 or 2 months at least. But certainly heading into this year, we had people expecting the typical sort of 4-year cycle of crypto or Bitcoin's price to be playing out. That is, Bitcoin is historically, even though it's a sample size of 2 or 3 times it's happened in the past, where Bitcoin tends to follow more or less the same 4-year cycle. Heading into this year, we were, if that was to hold, we were looking at Bitcoin topping out around Q3 this year. But I'd always had, thankfully, I'd cautioned members and just the wider audience to be like, sure, respect that trend, but don't like have it as your be all end all of decision making, because crypto is ultimately very, very new, and I would never be investing based off like a sample size of 2 or 3. So okay, where's this put us now? April 2025. In terms of like the rest of this year, I'm already sick of like talking about like, well, the T word, tariffs. But like, it's honestly, just to be honest, it's going to be like the most significant variable for at least the next 1 to 2 months, likely even longer. And so I've been toying with the idea myself, like from an investment lens of just extending like when I would expect the top of this bull market to be, whether that is like December this year, or even I think more likely we drag out into Q1 or Q2 in 2026. And then therefore that would officially be the end of this sort of quote unquote 4-year cycle for something like Bitcoin. So I hate to like be that person that, everyone's always like, this time is different is a dangerous thing to say. I think yes, in stock markets for sure, that's dangerous. But in something like crypto, I think, lean in a bit more to experimenting or just thinking about a situation where things aren't different or things are different.
Yep.
Yeah. So you think like this time it actually is different from like previous years? So
I think there's
typically
a good
the cycle would
amount.
end.
Yeah. I think it's a solid case amount that's the case. Like, ultimately, I think as Bitcoin has grown up and, we've seen ETF, launches, in the US early last year, that was in many ways like a very strong sign that, Bitcoin had, like, it's always maturing, but it's had integrated deeply into like, the financial markets and, TradFi. Ultimately now we see Bitcoin's correlation with like US stocks, being like quite strong, and also just like global liquidity is like very strong, like correlation for something like Bitcoin's price, where, previously it was a bit like, hot and cold in terms of correlation. So, sure, things could change, but I'm more open to this idea that things are different. And like, if you're asking me, are we going to top in September this year or like Q2 next year, I'm much more of the opinion that it's the latter, like Q2 next year.
Q2 next year. Yeah, right. Don't mind that.
Yeah, that.
Yeah.
But it would mean a lot of chopping around, which would be very much like 2024 in that respect, where between April and September was quite boring. It was just range bound.
Yeah. But that's how markets, all like, traditional markets perform, right? They're not always up, always down like crypto.
No way. What?
Yeah. What about more short term? So obviously you said like we're a bit sick of talking about tariffs, but like what does the next couple of months look like outside of tariffs? So like US Fed, quantitative tightening, these are things that you've talked about on Collective Shift. Can you give a bit more insight there?
Yeah, so the second one being the end of quantitative tightening, that's the Federal Reserve in the US sort of just shrinking their balance sheet, or sort of just letting sort of debt just run off and not sort of replace it, essentially. So the fact they're wrapping it up sort of has a beneficial sort of, a beneficial effect on things like global liquidity, the fact that they're sort of getting towards the end of that. But certainly if you see anyone saying QE or quantitative easing is starting anytime soon, I say like always be very wary of anyone pushing that. We can be in a period of like neutral, like no QE or no QT for many years, like potentially. But the fact QT is ending is something that ultimately is good for risk on. But I think certainly the more significant factor there is what's happening with interest rates. So that will, for better or worse, be heavily like responding to things like, trade policy and whatnot. But even before this year started, I think a lot of investors were pricing in, multiple, call it 75 basis points, 100 basis points worth of rate cuts in the US, that really like wound back. But now it's starting to, I guess, grow again. People now expecting maybe 50 basis points in 2025. But ultimately, like the more rate cuts there are, if in particular, and this is a key point, like if they're cutting and, shit's not hitting the fan, basically, that's ultimately very beneficial for risk on assets. If they're cutting and it's like, because of like recession or like recessionary fears, that historically has been a bit more mixed of like a result or an outcome of like risk assets. But certainly if they're cutting and things for the global economy are going along, quite well, then that would be prime time for things like crypto.
Yeah. Fingers crossed, right, Pav?
Yeah.
You're a macro man?
Yeah, pretty much agree. Like definitely the emphasis is on it's policymakers trying to do something. Like they've just sat on their heels and said higher for longer. But now we know like inflation is like crushed to the ground. Well, at least lately. It could be short-term inflation's come down quite a bit. Long-term might be on the way up because of all this tariff stuff.
Yeah.
But it might be enough of a window for them to go, all right, let's go, boys. Let's turn on the taps and start to see a bit of a liquidity injection.
Yeah.
I was only just looking at like USM2, like the US money stock supply, and It hasn't hit all-time highs yet, but you look at the Eurozone, Japan, China, all the major economies, they're all printing more money than they ever have in the past. So you got the US then coming to the party. Boom. Like, I think that's going to be a huge tailwind for crypto markets. But yeah, I totally agree. I think you look at even like let's call it the 2020 dip, and let's even go back as far as like GFC. Like, they were both, like, when it comes to like velocity of like markets de-risking, we talked about it last week. The data says like this is as quick and as ferocious as what we saw as like a commercial unwinding of risk. But it has to be backed up by policy. It has to there has to be like a directional focus on like, we need to turn the ship around, and it comes down to how quick does that pivot happen. I think how, like you're saying, if it take a long time to get things in order, we're looking at that option of like Q2, Q1 next year, where we can probably like not safely, but like at least anticipate the runway extending. But if there's like a quick rebound here, I think that's more concerning. I think that's when the top comes in sooner than what people are expecting. That's just kind of just my thoughts from here.
Like, do you sort of equate that to the COVID crash and then recovery?
Yeah, COVID crash was a good one.
Yeah.
Because that, it was quick in the sense that it was like 2 months, I think, by the time we were like hooking and sending again.
Yeah.
But yeah, GFC, like that was like 6 to 7 to 8 months before we actually started to properly do the dip, do the mean reversion, and then start to move higher again. It was that
was more like a proper recession. Like, are you saying we're sort of in that territory now?
Nah, I think recession fears, from the way I measure it, which is like, very simply put, if banks, which is what's in between like a Federal Reserve and like you and me, the consumer, if banks aren't issuing loans to companies to go and grow, then that's an instant warning sign. That's like the Big Short movie.
Yeah.
But if they're still issuing new loans to businesses to go grow, which is what's currently happening, we're just starting to print, 12 monthly highs on those metrics across, focusing just on Euro and US, because China, who knows what the hell they want to report and what's real. It's looking good. So if that starts turning down, I'm concerned. But yeah, recession for me is like not really an option from here, data perspective.
I hate to bring up the T word. I'll just call them arrows. Yeah. So yeah, this is like with the big one of the big like factors at play is like, how long will this uncertainty last for, and that will affect things like business decision making, or like budgeting, or planning for like future loans and lending. Things like people taking out mortgages, with like the yields like going up as well, is like really deterring people from like taking out mortgages. So if that like uncertainty lingers, like that's when you'll get like, I think, hits to things like bank lending. So Trump and his team like obviously know that. So I think that is in the back of their head.
Trump's happy to just switch 180 overnight. Yes. That's the one thing everyone has to know by now.
Yeah.
Well, Trump cares about the stock market probably more than anything, right?
But then Scott Bessent cares more about the bond market, which is what fuels the stock market, I feel.
But I think Trump's calling the shots at the end of the day. He would have seen the Dow Jones. He would have been like, not on my watch.
Well, the last week maybe showed that he has a breaking point where he's willing to listen to feedback, and I think that's why we pumped so hard.
I think 100%.
Yeah, exactly.
I think that's almost a tell for the market too, right?
Yeah,
big one.
All right, well, let's stop talking macro.
We're not.
We've had enough. We want to talk Fartcoin,
ultra macro.
I was going to say
Pepe, all those Bonk, all the fun ones. Let's dive into some altcoins, because that's something we haven't really done recently. But obviously, we're joined by a guy who's in the weeds, like basically day to day. So I want to get some good insights from you. And we're obviously talking long term, fundamental, strong projects here. Is there any projects that you like have recently jumped on as like a strong, I don't want to say buy, but like you're keeping your eye on? And is there any ones that have stood the test of time and you're sticking by your guns?
Yeah, it's interesting you say like long term. Like, I think there are certainly many projects that have come out like in the last bear market, even throughout this bull market, that I really like the looks of as fundamental projects, but their tokenomics are quite terrible, like, to put it harshly, or just quite like they give you nothing to incentivize you to want to be interested in them. So they're more so just on the watch list as really strong projects. So in that bucket, I would put things like Athena, even Ondo, like those sort of ones that are hitting probably year 2, year 3 of their life cycle, but they're in the midst of like significant like token unlocks that are going to recipients, like stakeholders, investors, who have like obviously like bought them or received them at much lower cost. So only naturally they would sell them. So they're ones I'm keeping an eye on, like definitely long term. One project that is really like I've continued to get more interested in like lately is Hyperliquid. And again, that's just, we talk about fundamentals, so that word gets thrown around a lot, but things like product market fit, continued growth of like adoption metrics, like key user metrics, how much of that is incentivized growth. So things like, just picture like companies like Uber, like remember when Uber came out and they subsidized a lot of the fees and it was so cheap, but that was often like incentivized growth. So
what is Hyperliquid in
Hyperliquid is essentially a place where you can trade like with leverage fully on chain. So I guess one of the bumps they may run into eventually like is KYC, so they don't have any KYC practices, which is certainly, I suppose, a something that's like I'm keeping an eye on that they may run into, but ultimately they're trying to build like a fully a permissionless exchange that anyone can just go on and trade like with leverage. That's their bread and butter, with the team having a background in that area. They've expanded late last year to spot, so they're just buying like spot Bitcoin and ETH, that's buying and selling, and they're expanding more into like Solana like in the coming months. But yeah, there's more I can say on that, but that's one that has, in terms of just like fees and fundamentals, they've like really clearly just continued to go from strength to strength, which in this market, which has been quite choppy even in 2024, there weren't many altcoins that had that sustained growth. Sure, they're like flash in the pan sort of projects, but Hyperliquid's one where I can clearly see 2025, even into 2026, like a clear sort of like phase where they can continue to grow.
Yep. Yeah, love it. And what about projects like Solana? Like Solana had, I think, what did it get to, like $260 US end of last year or around then? And since then it's come down. Obviously, most of the market has, but Solana is one that we've talked about a lot, and one that we both hold. But where do you see that sort of sitting in the grand scheme of things? Like, do you see it overtaking ETH anytime soon, or do you see it as more just like the alternative to ETH in this market?
Yeah, like I've been very like bullish on Solana for a while. It's one of my largest holdings. And yeah, short term, I've regretted not selling, but I was happy enough to get in like quite a lot lower than where we are now. But yeah, it wicked up to like 290, 280. Now it went back down to like 90 last week, like early 90s. So yeah, it's been all over the place. But ultimately, like, I don't really peg them against each other like Ethereum and Solana, like a lot of people do for engagement. But I think if we're at a stage where it can only be one of them,
let's be real, they both flourish, right?
Yeah. Well, yeah. Like if they can both continue to flourish and hit their own like niches or their own like users and developers, and there's a market big enough for both of them, I think that's something that I'm very confident will happen. If there's a scenario where only one can win, I think overall crypto would have lost.
Hey, that's a good one.
I like that. I like that.
Strong stance.
Pav, you were looking at a chart this morning.
It was Sol versus ETH. And just showing that Solana's just continuing to grind higher versus ETH. But I'm subscribed to the same thing. Like, just you see sentiment shifting around tariffs. I mean, it takes one hack on one infrastructure token to then send everyone to the other side. Like, I don't know. I just think you can't marry a coin. Yeah.
Pab's very objective and against the grain. He's got some wisdom up there.
And we'll call that.
Yeah. so he tells us.
Yeah.
Okay, what about Sui?
Yeah, so that's like, I really just picture that ultimately as people who missed out on ETH potentially, and then they sort of maybe went away from crypto. They saw Solana like really rally, and they're like, oh, I missed that. Like it's the natural like next one.
Yeah.
And like crypto being very short term minded is just naturally like there's always like a pool of capital going to the next hot thing. I think they're doing a lot of things right that is allowing them to like really gain some like momentum. Their marketing is really strong relative to other like layer one blockchains. They're quite centralized in terms of like their leadership, and they're almost like, I guess, the way they're building out their ecosystem, like their wallet. They've launched Walrus recently, which is
Walrus?
sort of like Filecoin and Arweave, but it's fully on chain on Sui. But that is uniquely is being developed or has been developed and continuing to be developed by Miston Labs, which is essentially the Ethereum Foundation or Solana Labs equivalent, which is like quite unique that they're sort of kin making and like starting up, incubating their own projects. So we'll see how that model goes like in the long term. Obviously, they've got unique, value propositions like things like the Move language, which a lot of the developers really, say is a lot more performant and secure than the likes of Solidity. But, at this stage of the crypto's like adoption, are we at that point where that really matters, that marginal improvement? But if we're talking about Sui just 2025, I think it's got like a lot of, like a few catalysts you could point to that if we do go full on risk on, I can definitely see that really outperforming Solana and ETH. But long term, if you were to tell me, hey, who's going to be around in 5 years out of those three, I would definitely have Ethereum first, Solana second, and then Daylight to Sui.
Yeah. Nice.
Makes sense.
I think before the show started, I took a snapshot of the top performers versus Bitcoin in the last 7 days.
Yeah. Did you find any?
All meme coins.
Oh, yeah, I did.
They actually were like, most of them were like double digits. Outperforming BTC.
Yeah.
It was meme coins and AI.
Yeah.
Is that kind of something you would have expected, or?
Yeah. Often like they're amplified returns. Like they've been battered. Like a lot of those meme coins are down 80 to 90% since like December. Same with the AI coins. So they'll be. I still think I would have said they would be the fastest to rebound. Which is what we've seen. Certainly individual, I guess, assets or individual meme coins or tokens in those sectors might change, or they are changing. Like even Fartcoin has been like leading the pack. Hot air rises, as they say. But like we would have been saying dog with hat, like dog with hat about 6-12 months ago. If we were saying, meme coins are going to rebound bigly, we would have said, dog with hat will be leading. But no, that's not the case.
Well, the top three are Fartcoin, Hype, which funny enough we talked about today. And then one I haven't seen in a long time, Render.
Ah, right.
I thought
there
that
you go.
was very interesting to see back in the fray. So Render and Tau. So it's almost like a 2023 run it back.
Yeah, there you go.
Yeah.
There you go.
Yeah.
All right. Well, I wanted to round out the episode with some questions for you personally, Matt. So
Sure.
What is like the biggest mistake that people are making right now from a collective shift standpoint? Obviously, you're talking to a lot of your users and they'd be asking you a lot of questions. Like, do you see any sort of trend in the behavior they're making?
Yeah, certainly being the biggest mistake, I think, is being too eager to buy the dip. Buying the dip gets peddled around a lot. It like historically is a great saying over a long enough like time frame, but buying the dip doesn't mean that like next month it's you're going to be sitting on like big unrealized gains. So being like too eager to use your like dry powder and like being too eager to deploy that is a mistake I'm seeing a lot. It makes sense that you can get in that mentality of everyone peddles that Warren Buffett quote of invest when
there's blood in the streets.
I've
be
fearful.
Never said that on here.
Be greedy when others are fearful
Yes,
and all
right,
that stuff. But it's like, but how greedy? But how fearful? It's all like subjective. And I just have seen a lot of people use all their dry powder way too quickly without respecting like what's going on in the macro environment.
It's because everyone treats their watch list like a shopping list, right?
Yeah.
They're
like
exactly. 60% off. How could I lose?
Yeah.
Very easily.
Yeah.
And then the last one is, what is the most important thing to understand right now? Now, you could probably argue it's not to buy the dip too soon, but I want to see if we can get another one out of you.
I think it is it's similar in a similar response to sort of like still have respect that altcoins will, I think once conditions are like right, they will come back with vigor. And a lot of people will have slept on altcoins or they just would have been ignoring them. So I think like my biggest like advice or the thing I'd like to highlight is that, just still continue to get in the weeds as best you can and like research altcoins. Sure, you don't even have to buy them, but just follow their progress. And by the time risk on comes back, that can be like you can be at a competitive advantage to everyone else who's just slacked off or just gone to somewhere else, whereas you've been here ultimately still researching. So yeah, that's something I'd stress.
No, you're right. I think people are so quick to write off all altcoins when, things aren't looking great. And then when things are looking good, then they're like just way too bullish on them. And then we just see this cycle of people who don't do too well in crypto. But I don't know.
That's why we're here.
That's what you're doing. Trying to save the world.
Yeah.
Pav, any final thoughts?
Gaming was a big narrative that got sort of pedaled, and honestly, Ted and I like invested as well at like the very start of, I think, the cycle. I don't know if you kept adding. But like I kind of stopped after it didn't really perform in 2023. What do you guys think about that sector? Because everyone keeps sort of pointing to use cases for crypto, and everyone keeps looking at gaming for some reason.
Yeah. I think all the metrics are like for gaming, like non-crypto gaming, are like so like they're so appealing that like people. It's similar to AI. They try to be like, oh, crypto must integrate, somehow. So gaming ultimately, and I've been saying for years, like there needs to be a game that is like fun to play, that like continues to have sustained like success in terms of, player acquisition or whatever. And certainly like other metrics you can look at with these games, but in terms of like if they're trying to generate revenue, and also like other fees, but ultimately like there needs to be a game that's fun to play. So like I'm open to the idea that Web3 gaming can work, but it's just hard to like find developers who are willing to like build for multiple years, when they could be getting paid quite well, like in just traditional gaming
doing whatever
as well. So the incentives, I think, are a big issue with like why Web3 gaming hasn't come along, both in terms of like speculation, users and developers. Is almost like those three, it's very difficult to find those three to like overlap and to be like, I guess, synergistic. But that's certainly something that can happen. It is a lot to get right, just in normal gaming, right? Yeah. Like, so then add in crypto, it's like even more difficult. Like,
no, let's get you out.
No, other than that, I think I'm pretty good. All right, well, we might leave it there. Make sure to check out Collective Shift, where you can get more of Matt's insights, and we'll catch you next week. Thank you, guys.
See you, gang.